This is the Times Television Network, and you're watching ET Now.
Vijay Mantri, who's been a money manager for over 2 decades, joins in for a local view, and Alpesh Patel of Prefinium Partners joins in for a global view. Gentlemen, both of you, thanks so much for taking time out for us. Vijay, let me begin by asking you, in the near term, what are the factors to your mind that the market will take cues from?
I think immediately market would look at, before the budget, I think they would look at economic survey. They would also look at the railway budget, which I think is going to be very significant and important. And then market would look at the budget. So I think you have 3 events in which the market would look at immediate direction. But I think within 7 or 10 days of the budget being announced, the market may go either like 200, 300 point either way, in the range only. But after that, I think the market will go back to its old grinding ways of looking at the corporate earning of March 2015, which we believe will not be very robust, but I think 6 to 9 months from now, you will see corporate earning showing uptick from these levels.
Alpesh, let me come to you now. You know, as somebody who represents the foreign investor community, what would you say regarding how is your assessment of the budget, of the sentiment ahead of the budget? Do you think it's cautious, or there are parts of the market which you find frothy?
I think there's an incredible amount of hope on the budget, not least because, of course, it's the first major budget following the election. And when there's that much hope, there's only one thing that can happen. It can only, sadly, I'm sorry to say, lead to disappointment. There's an old adage in the market, which is buy the rumor and sell the fact. So if you see the market starting to rise Wednesday, Thursday, Friday, then you can be sure that after what happens on Saturday, then you're going to get falls on Monday and Tuesday. And that's because, as I say, you buy into the rumor or the expectation and then you sell off. If the opposite happens, then of course you start buying on Monday. I mean, it's an old market adage and it always tends to work. But for us as foreign investors, there is one immense great piece of news that I can tell you. We are absolutely sure of wealth creation, regardless actually of what happens in the budget and what happens in terms of governments. And the reason for that is we've seen that long-term trend, and that's what we invest into as private equity investors. And we just today, I've just come from closing a deal with our alternative art investment, and that only happens in countries generating huge wealth. We invested in a young artist, Manoj Srivastava, and we expect those kind of alternative investments which tap into growth and wealth creation in the country to continue. So in one sense, longer term, there's only good news that we see as foreign investors into India. Short term, yes, you're going to get some volatility.
Since we are talking about how markets and asset classes, especially equities, would respond to budget right now, let me bring our attention back to, how the budget perhaps could be a direction giver. Vijay, as a market participant, what are your specific expectations this budget?
See, I think the ambition of the current Prime Minister is just not to last one tenure, but to look at maybe perhaps 2 tenure. So in that context, I don't think they would look at immediate, instant gratification kind of things. I think they would look at putting the robust system of governance in place. I think in India, such a vast and diverse country, as long as there's the right kind of governance, I think the opportunity would come at its own. The only request from the government is that they should not do anything stupid, which I don't think this government has demonstrated that they are capable of doing stupid things. So I don't think the market, or me personally, would look at anything dramatic. I think the way market is looking is that the saving on oil prices fall or commodities fall, how they're going to use it to revive the investment and capex cycle and put more money into infrastructure project, because the private sector investment is not coming in yet. So I think the market would look at that. So that would perhaps will trigger market reaction.
Alpesh, that brings me to my next question. You know, Vijay talked about how private sector investment is not coming in yet. In that light, what do you suppose the finance minister's target area really should be? Should it be fiscal prudence, or is it time that he sort of, stood up, took notice of the fact that we also need to break some investment on the ground?
Well, given that we represent foreign money, which is desperately needed in India when you consider the amount of capital that's needed for infrastructure in order just to make business easier to do. And so when you look at funds such as ours setting up in India, I think what we want to see from the finance minister is anything which points to it being a lot easier for us to conduct business. And by that I mean things such as protecting minority shareholder rights, things such as the commercial courts and litigation through those being a lot swifter than it is, because these are the things which cause us fear about investing in India, is will the commercial system, will our protection as minority shareholders, should we have to go to litigation, will we be protected there? Those are the kinds of things we want to see, rather than the things actually that people look at, which is how much government spending is going to be undertaken, because yes, of course, we're afraid of the budget deficit. And that's what the reason why we want to see more foreign capital come into India rather than just the government trying to spend domestic capital through tax take alone, because as we know, the tax take is incredibly inefficient in India in terms of the percentage of taxation that the government actually recoups from corporates and individuals. So we really want to see foreign capital come in, and I say the best way to do that is to make doing business here a lot easier through protection of minority shareholders and the commercial legal system being a lot smoother.
Alpesh, I want to keep it with you, and I'm just wondering, you did talk about how, you are largely an emerging market investor. Does India somewhere take the position of first among equals when it comes to the entire emerging market pack? Because there's no denying that the macros of the country have been on the mend. Crashing oil prices to a large, to a large extent have helped us. So given that, would you say that we're still sort of top of the pops?
Yes, most definitely. When we look across the world, and we have access nowadays, based out of London, so many financial instruments we can invest right across anywhere. And the reason we've chosen India was because this long-term growth trend is not going to be pushed back. The genie is not going to go back in the bottle. So yes, it's very much up there. What we want to see from any government is this continuation of hope, which is why we were incredibly disappointed by what B.Patel said, because that almost let the air out of the balloon, and we really need to see entrepreneurs on the ground, the kind of people we deal with and the companies we invest in. We want to see them having momentum, and we'd rather have seen from somebody like B.Patel as a role model, we'd rather have seen him giving inspiration and hope to businesses and to entrepreneurs than actually saying, well, effectively, oh, things aren't that great. Because that energy is what we invested in India for, and that's an energy we don't get when we look at Malaysia or Singapore or China. We don't get that safety, that commitment to entrepreneurialism and to business that we see on the ground that entrepreneurs have. And we just wish B.Patel hadn't said that kind of thing. I think he should have taken much more of a stronger line in favor of the entrepreneur and in favor of hope over hurdles and obstacles.
Right. Vijay, how are you really assessing the market levels, even valuations, and are you now open to looking at the other areas of the market, perhaps small cap and mid caps?
See, if you look at from a classical fundamental perspective, either from P multiple, book value to price, sales to market cap, or GDP to market cap, from all these parameters, market is looking at the top end. And if you look at the corporate earning, most of the data are actually suggesting that could be bottoming out. So if you look from a capacity utilization to EBITDA margin to sales growth to profit growth, I think the market is looking at a perhaps worst period. So from that perspective, I believe the market would look at the corporate earning, and we believe the corporate earning will come in. It may not come immediately over the next 1 or 2 quarters, but maybe 6 or 9 months down the line, you will see corporate earning coming in. Between large cap and mid cap, I think the mid cap and the small cap, you see some froth building in there, because the depth, liquidity depth is not there in those stocks. So many stocks which are quality stock but perhaps illiquid, they have gone up too much. So I think in immediate maybe 3 months time, unless you see huge profit growth, the mid and small cap, some stock will remain under pressure. From where is going to be the next market really? I think it will be driven, in my opinion, by capex cycles. So capital goods, cement stock, automobiles are the kind of sector which I think is going to do much better over a period of time.
Alpesh, when you're looking at Indian companies and the sectors, which are the areas which are looking interesting to you, where you think the earnings growth would be healthy going forward, the demand-supply scenario is good and positive for investors such as yours?
Yeah, I mean, we tend to focus, we really like the healthcare and the clean energy sectors. And you've seen the Prime Minister make announcements on clean tech in particular, and that's been encouraging. But to be honest, you know, we're flooded with opportunities almost across every single sector because we take a very bottom-up approach. So we'll look at individual securities rather than just looking on a top-down basis. But if I really had to look on a top-down basis, one of the areas that concern us the most is the banking sector. We're not very positive in that area. We don't think there's enough competition there. We see companies and businesses that we deal with complaining about the cost of capital, and we think that's because of a lack of financial products available to them, a lack of market access, lack of competition, and so we think that's a sector which we'd stay clear of. But on the flip side, what we really like, we continue liking any of the software companies. We see that India is innovating more and more and competing on a global stage there. The one thing overall which worries us about corporate earnings coming out of Sensex companies, Nifty companies, is this: that the devaluation of the rupee over the last few months to year has removed that discipline that companies needed to have to ensure that their cost base was low. Because of course, as the rupee depreciated against the major currencies, it meant that their exports became cheaper, and to be honest, it meant that sales became easier to achieve, and so that discipline might have gone from management, and that concerns us because as the rupee appreciates, and we think it should because of the Indian growth story, they'll lack that global competitiveness that comes from a strong currency. That concerns us, that as the rupee appreciates, there'll be a double whammy of exports becoming more expensive, but also productivity and competitiveness having been lost from management.
Vijay, I'm going to let you have the last word and talk to us about what your views are as far as both foreign inflows and domestic flows go in the coming months.
I think the domestic flow would go up pretty substantially. If you look at last, I think maybe 10-12 month period, the total inflow in mutual fund is equal to around 30% of what we got in last 5 years, and around 60% plus of what we got in last 5 years, around 30% of what we got in last 10 years. I think, and that is the flow which has come from only high net worth individual and smart money. I think the retailers and middle class has not yet participated in that. I think when you see interest rate going down, when you see real estate is not delivering any return, when you see gold is not doing too much, I think a lot of this money which was stuck in all these asset category, the incremental cash flow would come into equities. So that piece will continue to do well. If you look at international market from where the money is coming, I think it will continue to come in because in a scenario where in most of the countries interest rates are bottoming out, is going to go up, GDP expansion is not taking place except in US. I think India is looking like a shining example. So I think more and more international money will continue to come in. So from flows perspective, I do not see anything dramatic is going to change. I think on the contrary, it is going to be better and better. I think the key word to watch out is when the capex cycle is going to get revived and when the corporate earnings are starting seeing better number than what we are seeing right now.
Let's hope for that, Vijay. Gentlemen, we'll let you go on that one. Thanks a lot for joining us, both of you, Alpesh and Vijay. Wonderful chatting with you today.
This is the Times Television Network, and you're watching